A company that can go from $35 to $500 in the next 10 years? You heard that right. A company that just had a Super Bowl ad that went mega viral. In this video, we're going to be talking about HIMS&HERS, ticker symbol HIMS. And in this video, I'm going to be going over who this company is, what they do, what their specialties are. We're going to be using AI to help summarize their recent presentation. We're going to be looking at Seeking Alpha, having their AI help us look at the valuation of this company. And then we're going to get into the charts, and we're going to get into my famous high five snapshot, which is essentially my spreadsheet that I built to help me determine when, where to buy, to sell, to hold any company that I'm looking into to own long term. So without further ado, let's get into it. So here we are on Seeking Alpha, and we're just going to get a quick snapshot of who HIMS&HERS is. HIMS&HERS Health is a telehealth platform headquartered in San Francisco, California, operating in the United States, the United Kingdom, and internationally. The company offers a wide range of health and wellness products and services. Their platform connects consumers to licensed healthcare professionals, providing access to both prescription and non-prescription health treatments. The company's offerings include services in sexual health, skincare, hair care, mental health, with a strong focus on personalized and accessible care. They're also in the weight loss sector with their GLP-1s, but those have been taken off the short list, so they are working on that, and they have actually put in a claim to get those, to be able to sell those products again. So we'll see how that works out. It is a very small segment. If it doesn't work out, I can see them partnering with a bigger company like Novo Nordisk or something to be able to provide their products through their platforms. So founded in 2017, HIMS&HERS has facilitated over 30 million telehealth consultations, revolutionizing the way customers fulfill their health needs with a digital-first approach. Their business model predominantly revolves around subscription-based services, SaaS companies, providing predictability and consistency in revenue through recurring sales. HIMS&HERS also offers a diverse range of over-the-counter products, such as shampoos, conditioners, skincare items, along with prescription medications that can be accessed through their mobile applications. So basically, a lot of what HIMS&HERS does is they are targeting the younger generations, millennials, Gen X, Gen Z. They're targeting these younger generations, like some of these other companies, Robinhood, SoFi, like these other companies are, to really build up their brand and to be lifelong, to have these lifelong users in these younger categories as they grow older. And obviously, as they grow older, then more health problems will follow. Obviously, just the cycle of our bodies and our life, we just tend to get older and things start to break down. So they're playing the long game here and being the specific healthcare of the younger generations moving forward. So that's why I'm so bullish on this company. Some of the competitors include Teladoc Health. You may remember Teladoc from a while ago. They ran huge on the stock price back in 2022, and then they had a massive crash, and they are just, massively down from where they were. And I feel like they're getting close to that bankruptcy, area. They're also going up against Amazon Pharmacy, and obviously Amazon's a huge competitor to them, but I will say that Amazon has so many other fish to fry, and it's not their core business, where HIMS, this is everything to them. This is everything to HIMS&HERS. It's everything to their business. They put their heart and soul into this, and they do it the right way. Amazon has so many, fish to fry. They have so many things going on that it's really hard for them to focus and to really crush, what they're doing, on the pharmacy side, because their main business is obviously e-commerce and the cloud. So take it what you will. I just don't see Amazon really knocking them off their stride. I think they're number one in this field, and they continue to gain market share overall. Then you have Row, which is Rogaine, and they're starting into this space and they're doing all right. But again, Hims and Hers is the leader. They set themselves apart through the consumer first approach, focusing on personalized and accessible healthcare solutions. Really, like they are just very personable with what they are doing at this company. They're really making it like Robinhood made investing fun and modern for the newer generations, and that is what Hims and Hers is doing to healthcare. They're massively disrupting the healthcare sector with what they're doing, and that's why so many people are bullish on this company. The company's unique value proposition lies in its comprehensive digital platform, which integrates telehealth consultations with personalized treatment plans and a wide range of curated health products. By leveraging technology and data insights, Hims and Hers provides an efficient, seamless healthcare experience, emphasizing affordability and convenience for its users. So they are the whole package. They're going after these younger generations, and they are doing a phenomenal job on the front lines, taking market share, and just overall, I think they'll land a big partnership with some pharmaceutical companies, and it could get really, really, you know, things can get even better for this massive growth company that they already are. Valuation here, they talk about the price to book of being 16 and how the sector median is 2, indicating it's expensive with the PE is 65. But we're going to get into the valuation a little bit later, and I'm going to show you why I believe that it's actually should be an A plus, and it's massively undervalued at these prices based on what I'm looking at, free cash flow and earnings per share growth. And I believe it's so massively undervalued, and they're comparing Hims to the dinosaur companies in this sector, and I'm sorry, but those companies aren't growing 20, 30 plus percentage a year revenue growth. Okay, so they're not growing EPS 20, 30, 40% per year to their bottom line. Like, it's just not happening for these other companies. So of course, yeah, the sector median is 2 and they're at a 16 because they are growing much, much faster, and they are taking market share away from companies like that. And as you can see, growth, they did 45% revenue growth, vastly outpacing the sector's 7%. So you see what I'm talking about here, right? So you can't just sit here and say, it's overvalued because the sector's a 6, their sector's a 2 and their price to book is a 16. Well, if we look a little bit deeper, it's because they're doing a 45% revenue growth while the sector's doing a 7% revenue growth. Come on, we gotta look at all the facts here. Profitability, we'll get into that. Momentum, and revisions, we're good with all that. So let's jump on over into their recent presentation here. So I went ahead, and Adobe has this really awesome little AI assistant here that you can kind of just put this in there, and they'll give you the summary of what we're seeing here. So I just kind of want to roll through this and talk about the overall summary of who HIMS is a little bit more, and what their recent presentation showed us. So mission and platform: HIMS and HERS aims to democratize access to high quality personalized health solutions using technology for a seamless experience. The platform addresses various health specialties, including sexual health, dermatology, mental health, and weight loss, like we already talked about. The leadership team, the company is led by CEO and co-founder Andrew Dudum, with a leadership team experience in scaling disruptive companies. This is a founder-led company by this man right here, and this team is just outstanding in their backgrounds with other companies, top tier. I would not want to have any other board members. I love what they're doing with this company. I love where they've taken it from the price of being down to like $3-4 per share, all the way up to $70 some recently, and now back at $35, presenting another buying opportunity for this amazing company. Board members includes continuing members like Andrew Dudum, and new additions in 2024, bringing expertise in technology, foreign policy, pharmaceutical operations, and regulatory compliance. So they're building just a super team of innovators and just brilliant minds, bringing them to the forefront of HIMS and helping them overall with their distribution, with what they're trying to do long term in their vision. So clinical excellence: the company collaborates with an internal medical advisory board and healthcare partnerships to ensure clinical excellence and compliance with regulatory requirements. That's huge. Being linked between the doctors in their company is just massive, because you now they get to now say, hey, this is what our clients want, and the doctors can say, okay, well, this is what's legal, and this is what's illegal. So this is what we can do, and this is what the clients want, and they meet in the middle to basically make everybody happy there. Moving on, market opportunity, as you can see here up on the screen. HIMS&HERS targets over 100 million potential consumers across various health conditions, with a significant portion of the population yet to seek treatment. So sexual health, they're aiming at 80 million plus. This is their market. This is what the market they believe they can get through these products. 80 million for sexual health, 80 million plus for dermatology, 100 million plus for mental health. Obviously, anxiety, depression, panic attacks, all these things have really just escalated massively since COVID for a slew of different reasons: PTSD, insomnia, substance abuse. We live in a world where our brains, whether it be, it's always been an issue and people have just never brought it to the forefront or sought treatment for it because they thought they were, wrong to do so, or whatever it may be. But definitely, if you have problems, mental health wise, anxiety, depression, seek help. There's so many things nowadays to be done about what you're going through mentally. I've personally have gone through things in my life up in my mind, and I've gotten the proper help that I needed for them. There's just so many things. It's okay to not be okay, everybody. If that's one message I would love to get across, it's okay to not be okay. Seek help, get the help you need, and get better. Okay. So this is obviously a massive market that is, it's sadly growing. I hate to, be on that side of things, but HIMS is doing a great job at making it, it's okay to not be okay, and for them to give you the help, whether it be counseling, whether you need medication to really help you, whatever it may be. They're really at the forefront of building this up and helping people, especially in the younger generation. And then obviously weight loss, just a massive opportunity. Especially in America, we have 50% of I think our population is obese. So they're really attacking this area. Metabolic disorders, insulin resistance, appetite control, digestion, diabetes. You see they have these massive pillars in the healthcare field, and they're just really, really attacking it. And there's just such a massive total addressable market for them to keep on taking market share and keep on trucking along and getting better and better. Platform evolution. The platform offers awareness, access, exceptional service, and data-driven personalized solutions, enhancing user experience and retention. So as you can see here, they're just, it's a SaaS model. It's a subscription as a service. They really are personalized, and they really get after, who their consumer is and what their consumer wants. And they do a great job at that. And that is the reason that it's so hard for Amazon to come in here and just eat their lunch, because they are so personalized. They do very well with the data they get from their consumers, and they're just great at spinning that data and giving the consumer what they want in a very personalized way. And when you do that as a business, it's hard for somebody else to come in there and really eat your lunch. It really is. Even if it is Amazon. Amazon, like I said, is in a lot of things, and they're not getting that personalized with everybody and everything on the pharmacy front. So financial performance, the company has shown strong revenue growth with a 69% increase in 2024, reaching a $1.5 billion revenue. And the subscriber has grew by 45%, and the adjusted EBITDA margin expanded to 12%. Strategic priorities for 2025. Focus areas include leadership and weight loss, integrating lab diagnostic capabilities, expanding personalized solutions, launching new specialties, and enhancing technological capabilities. Recent acquisitions of facilities for compounding, lab testing, peptides aimed to strengthen the value proposition of support long-term growth. So they're just making all these very very big chess moves to make their company bigger, better, greater in the long term. Long term vision, the company plans to average AI and data insights to enhance diagnostic tools, personalized treatments, and follow care, ultimately aiming to export its platform capabilities to the broader healthcare ecosystem. Financial outlook for 2025. The company anticipates strong top line revenue growth with revenue projected between 2.3 billion and 2.4 billion and continued leverage in marketing and operational efficiencies. And their marketing team did a phenomenal job at with their Super Bowl ad. It is sad that the GLP-1s are, they removed them off the short list, and now HIMS actually cannot um, you know provide them to customers anymore. But they do have other weight loss products that they can start selling, and like I said, they are right now uh, attempting to get their GLP-1 to be able to be sold. Capital investments with focusing on expanding facilities, increasing automation, and broadening personalized capabilities to unlock care for millions. Um, and yeah, so that's our little summary from Adobe. I think they did a great job, getting through some of these that we didn't see. Long-term leadership position and weight loss. We went over all these things. And you can find this all on their investor relations page. They're just doing so many things right, and it's so smooth. And what they're doing is just really making it a personalized product for their people. And they're just taking market share from these other companies and just growing at a massive pace. So moving on here, we finally get to the high five snapshot, and then we'll look at the charts a little bit to see where HIMS is going on a technical basis. So as we can see here, we have everything plugged into our high five snapshot. We have our factor grades down here. This is through Seeking Alpha. We have a D minus valuation. Like I said, I don't believe that's accurate. And then everything else is an A minus, or sorry, A or A plus. So free cash flow margin for the next 1 to 5 years, they're currently doing 12% free cash flow margin rate. So they're currently doing 12%, and I'm saying over the next 5 years, they just do 12%. Let's be conservative on this. Then the last 5 years of this overall 10-year analysis, they're going to be doing 15% free cash flow rate. Now, this is the funny thing, guys. I actually think they can get up to 15% within this next 5 years and be consistent with that, and then get up to 20% plus free cash flow margin rate with the incorporation of AI and other key metrics to drive down costs and to make everything more seamless. So again, we're being conservative with a 12 and 15. I have their terminal value. So at the end of this 10-year analysis, I have it as a 20. So it's similar to PE. What PE do you give this company? I give this basically a 20 because they're growing revenue growth 20% plus for the next 10 years. And these revenue growths right here, these are even pretty consistent, honestly, just because um, you know, I just I want to be conservative with this so I can get like a good price here to tell me that, hey, being conservative, it's still a buy today. So we put in 40% for 2025, then dropping down to 17%, and then staying right around that 20% marker. A little bit above, a little bit below. Just throughout, just to be consistent and just to be again conservative. They're currently doing $1.477 billion in revenue. They're giving up almost $200 million of that to stock. Sorry, almost 200 million of that is free cash flow, and then they're giving up about $92 million in stock-based compensation. These high growth companies that are early on in their days as a company, they typically give a lot of stock-based compensation to the workers that have been there this whole time. And then we have a $11.4 million to the net positive side, net cash to net debt. They have a positive rating of $11.4 million. Shares outstanding is 222 million shares outstanding, And then we get down here to some of our, metrics. We have a 2.24 free cash flow yield, a forward free cash flow yield of 2.22%. We have a current PE of 66.6 with a current EPS of 54 cents, an expected EPS next year of 62 cents. And I actually think that's pretty um, light if I'm being honest. I think they can do way more than that. But that would give us a forward PE of 58, and then our PEG ratio, since they grew 200% revenue or EPS growth, is 0.33, which anything under 1 is very good on a PEG ratio. So we get to our, what is a fair value of this company? Fair value of this company, HIMS&HERS, is $65 per share based on a discounted free cash flow model with a 20 forward free cash flow terminal value. Now we can come in here and put a 15, and that's crazy because they're growing 20% plus for the next, 10 for this whole decade. So, 15 is very light. That's being even more conservative, and it's still giving us a $53 intrinsic value, fair value. And the current stock price today is about $36 per share. So very conservative there if you want, but either way you spin it, 15, 20, I believe 20 is actually fair for them doing 20% revenue growth per year or more. And again, these are conservative revenue growth rates. A lot of analysts have them growing, high 20s and some even 30% years. I cut those out. I want to be conservative here. So they have a 45% current margin of safety from their current price. $65 is the intrinsic value. It's what, people should be paying for this company. And again, don't forget that they just hit a 52-week high of about $73 per share. So they really did just have that giant launch up. But, the market's been, in this correction. The market's having a correction right now. And when that happens, high flyer growth companies, companies people are FOMOing into, the hype behind the company fizzles out because people start getting scared about, this correction becoming a stock market crash. I don't believe that's where we're at. I believe it's just going to be a correction. Then we'll be back on the up and up for now. And yeah, I think this is a great buying opportunity for this name. If we look at it on a discounted cash flow model, annual CAGR, we should be getting a annual CAGR of about almost 31% per year. Now, the market average is 8 to 10% per year, so that is absolutely massive. And coming to the end of our 10-year analysis, we're looking at a stock price of $517 per share. Again, take it with what you will. These are projections, and everything has to go, perfectly along these lines. That means no recessions, no stock market crashes, all these different things, right? But, just taking it by the numbers, we know that we're getting a good price on HIMS&HERS. You know that you should be getting, 20 to 30% annual CAGR on this name over the next 10 years if they do hit these milestones. And then a 10-year EPS, same thing, 31% annual CAGR, $545 is where you get to. And again, that's just a massive gain from here. It doesn't take a brain surgeon to see how massively undervalued this company still is right now. And buying up to $65 per share or $54 per share if you want to get super conservative, it does make a lot of sense. And that is something that I'm doing. I'm continuing to DCA, dollar cost average, into this name. Finally, we get down here to the EPS growth rates. Again, I went a little bit more conservative than analyst, and having a 66 PE and then dropping down to a 40, 30, 25, and then a 20 PE to round us out, puts us at, it's not a buy here in the first couple years based on this. The fair value, fair value is basically where it's at right now in 2028, 2029. On an EPS growth rate percentage, looking at this, like I said. But if you were to continue to dollar cost average in the back half, the last 5 years of this overall 10-year analysis, you see that you'd be getting a massive discount on this name, buying at 20 PE, 25 PE, and basically coming down to about $105 fair value all the way out in 2035, which again, the name is $36 per share. And again, this would mean if we grew at these EPS rates, this would mean that we should be able to get to $545 per share in 10 years time with a 31% annual CAGR rate. So I personally have a buy on this name, Hims and Hers. Now let's get on over into the charts and see what's happening. Like I told you here, we did run up to about $73 per share here. I have the intrinsic value line here at $65 per share. We broke out of this massive cup and handle, or you could have just called it a rounded bottom from here to here. We broke out, and as we usually do when we break out, we come back and we retest the breakout that we had. We have a parabolic move here up to $73 per share. And we quickly, because the market fell down so harsh, we quickly wicked back down, as you could see here. And now we are actually came all the way back down to, some would call this random luck where we came back down to when we bounced. Not me. If you know your technicals, you can easily see that this was once resistance. $35 was once resistance. We broke above $35 and went to $73 per share. Then we came back, and we came back right to that $35 per share, because that is where we once had resistance, and resistance needs to be flipped into support. It's like a bully in school that needs to be hit in the face because he just won't leave you alone. The only way to flip that bully into a nicer person sometimes is to smack him right in the mouth. And not to promote violence, but sometimes enough is enough. So coming back, breaking this resistance, you have to come back and now say, hey, resistance, you know what? You gave me a lot of trouble here at $35. I want to make sure that you understand that I'm never coming back beneath $35 again. So I'm coming back to retest you at $35. And if they bounce here and get a confirmed and successful retest of $35 per share, that will now be support. So once resistance, now flipped into support if we continue to bounce here, and that'll now forever be support instead of resistance at $35 per share. So if the stock ever gets in trouble again and falls down here, this is going to act as major support. And this is a monthly chart, so we're looking very long term here. But as you can see, we're also just making higher lows and higher highs. And when you have that, then you have this, what we call a bullish uptrend. So yes, things have crashed down, people like to say, because we went from 30 or 73 down to 35, and that's a massive move. And I understand if you were buying up here, you were hurting really bad right now. But if you were dollar cost averaging the whole way when we were calling this name out down here sub 30, then you're doing very well for yourself, and you might even be looking at possibly adding more shares to this name right now. So I think where we are at right now, we could come down and break down into 30, maybe 29, 28 area, depending on how, much more of a correction we get here. If we get a crash, then we will come back down to where we previously had resistance, down here at about $26, $25 per share, which you see here. We broke out, we came back, we retested, flipped resistance to support, and then continued higher. And now we are doing the same thing at this last resistance at 35. So if the market continues to fall down, I do think that we could come down and see 24 to $26 area again. But if markets decide, enough is enough, or this correction's over, and the markets decide to go back up from here, then I do believe that this $35 level will hold or around it, right? 33, 37, whatever, right? It's this realm right here that holds, bounces, and then we continue higher. So as far as my eyes, this area from 35, and if it gets down to 24, 25, 26, that's a gift. That's a gift from the gods, because I already told you that I believe this is a $65 intrinsic value based on the numbers. We already walked through what this company is capable of, their mission, what they're doing moving forward, and how big of an opportunity this is to continue to disrupt the healthcare space and to continue to take on these younger generations and be their healthcare providers and pharmaceutical providers for the next 10, 20, 30, 50, 60, 80 years. with these newer generations. So you understand how big the opportunity is. You understand where the buying spot is. It's here and lower. Honestly, I don't think it'll go lower than $23 per share unless we really do get a market crash of 30% plus or something. So I believe there's a great buying opportunity. I'm personally dollar cost averaging into this name. You can do what you're gonna do. If you like this video, like, subscribe, follow for more. I continue to put out these videos because I like talking about the investing side of things. I like talking about the trading and the chart side of things, and I really am in this world of I'm a full-time investor. I'm a full-time trader. I separate the two with different portfolios, and I help everybody in my community. I help people on X. I help people on YouTube. I want to help people understand the world of investing and trading, and whether you want to learn about trading, whether you want to learn about investing, how to value a company, how to look into financials, we're doing all of that here on this channel. We're doing that all here on X. We're doing that in my community, whether you're a trader, investor, or both. And that's why I say the high five community is where investing and trading meet. So love you all. Hope you enjoyed this video. Hope you got a lot of value out of it. That's all I'm trying to do here. If you're interested in joining the high five community, or at least looking into it, you can check the link in my bio. You can check the link on my page. Everything that you need to know is there. And if you are interested and you do come on over, welcome in. If not, thank you for your support on X and YouTube and everywhere else on social media. And I hope you have a great rest of your weekend. Talk to you in the next one. See ya.